What's up, Mortgage Coach community? It is Friday, Mastermind time. My name is Dave Savage, CEO and founder of Mortgage Coach. I'm with my wing man and the man who started this Friday Mastermind with me 200 episodes ago. What's up, Todd Bookspan?
Hey, it is so amazing to be here, and to be at episode 200 is epic, and excited for our special 200th episode guest, none other than Jason Frazier.
What's up, Jason Frazier?
What's up, fellas? I'm just hearing that. That's awesome. I'm honored to be here for number 200, and looking forward to, as you guys do, 200 more.
Yeah, no, it's been fun. So, guys, when we started this 200 episodes ago, it was a 90-day thing. Like we started this for 90 days. I had partnered with Darren Hardy to create a product for the mortgage industry. God, I just forgot the name of the product on it. Elk Stream. Insane productivity.
With Mortgage Coach.
Yeah, and we brought in some Mortgage Coach ballers. We created some unique content around Darren's insane productivity. And to just add some meat on the bones, we're like, let's do 90-day every week. Todd and I every Friday we'll do this call. And then we said, oh, let's start a Facebook group to support the call. I think we did that on like episode 2 or 3. We're like, let's add a Facebook group. And God, what a gift. I mean, we've got over 10,000 opt-in mortgage professionals in that group, and we've never marketed it. It's all organic because of you and the people that promote it. Oops, I just remembered I didn't start the broadcast. Sorry, guys. Usually I have someone helping me do this. And so the good news is I recorded it, and if you are if you're watching this from Facebook, you got the whole show. If you watch the recording, you got the whole show. Everybody that's watching this from Zoom, sorry guys, you missed 2 minutes of just bragging about episode 200. So anyways, so let's Todd, anything else you want to say about 200 and the backstory before we bring in Jason and start getting after it?
No, I think the big thing is you guys know how passionate Dave and I are about the community. And at the end of 90 days, Dave's like, should we keep going? And so we committed to go for another 90 days. And then at the end of that 90 days, we're like, heck, we're all in. And I'm just so grateful, Dave, for you and your leadership and your friendship and mentorship. And I really feel like, you've helped me grow as a person. Certainly Win by Noon wouldn't be what Win by Noon is without you and without this community. It's really my biggest area of support. And I'm just grateful for everyone and looking forward to the next 200 episodes.
Right on. Just saw a nice shout out from Scott Short. Appreciate that, Scott. I did have one other thing just hit my mind on like why we kept doing this. So now I am ADD. And so part of how I balance myself is I consume content, whether that's listening to podcasts, whether that's reading books. Some of that is selectively looking at social media in a way that's productive and not counterproductive. But I just have to consume. And I have always, all my life, consumed at least 2 hours of content. Before I had kids, a lot of unproductive consumption. After I had kids and I got serious about my success, very productive consumption. But one of the things I learned about myself is that I'm even better when I consume and I create. And so part of this call, and the reason I keep doing it, is because it just makes me better. Like I hear all the time that, you guys get value and we are doing it for you, but guys, I just do it for myself. It makes me a better leader when I'm super present interviewing someone like Jason. So I only say that because I just want to push you in this community. You got to consume to be smart and to get better. But I also believe if you're going to be your best, you need to create and you need to lead. You need to create content to be your best. So I don't know, Jason, you agree with that thought? And is that any part of why you also create content?
Yeah, absolutely. I couldn't agree with that more. And in fact, it goes, even though what we're going to be talking about is about legacy in other ways, but that's true too. If you need to learn, right? Especially in this business, change is something that is going to, just in life. But I think now that we've looked at since like 2000, 2010 to 2020, the amount of change that happens in our culture and with technology and even within our industry happens at light speed, right? And so I think consuming that content, learning from people, even people that you may not align with like in some form or fashion, if you don't even like them personally, because there's a lot of people that are, are out there speaking and leaders that I really don't like personally, but doesn't mean I can't learn something from them. So I think consuming that content and then creating it to put yourself out there to stand out is super important to creating a sound legacy in this industry.
I couldn't agree more. So that's, guys, push number one, 5 minutes into it. I want to get everybody to reflect on, how much time are you spending consuming, which is important. And you need to consume leadership content, things that make you better, smarter, happier, more confident. But you also need to create things that do the same things. Todd, anything you want to say about that before we just start drilling Jason Frazier?
Well, I mean, I think that from a productivity perspective, I think that is always the black hole that people fall into, right? Email, right? Where everyone manages time by email. And then I think the whole social piece. And I think that's really my personal struggle has been the balance between creating and consuming, because I've been creating less because when I get in there, I tend to consume more. And I just encourage you all to figure out how to get that balance. And that's, absolutely the journey that I'm on.
Love it. And one little thing, I say it all the time, you can start, like if you don't do video and you're afraid to create, an interview on Facebook with a real estate agent or create some type of Facebook, guys, just do text video. Just think of the last person that you had a meeting with, probably didn't meet him in person, but you had a realtor that you had a Zoom conversation with, and do a 15-second text video saying thank you. For all you mortgage coaches out there, make sure you're putting a video on your TCA. Little videos like that, start with that, and then get into things that are, more creative, interviewing people. All right, so let's get into it. So Jason Frazier, I can't imagine anybody that goes to events in the mortgage industry, consumes content around the mortgage industry, doesn't know who you are. But just in case there's someone brand new to the business or someone that for whatever crazy reason is, doesn't know who you are, could you just give us a quick, who's Jason Frazier?
Yeah, no, so proud to be here again. Thank you, Todd and Dave for having me, on. But
content around the mortgage.
Oh, sorry, I was hearing some feedback.
Rookie,
hearing some feedback. Yeah. So Jason Frazier, I am the Chief Strategy Officer for EPM, and I've been in the industry for a little bit over a decade. The mortgage industry is in my blood. I was born into it, literally, and I won't get into that story. But basically, it's a family business for me, and for me, it's about legacy, and I'm very passionate about this industry, seeing it endure. That's why I tend to be a little bit blunt and candid with the content and stuff that I do. I'm also a national speaker. I spoke on, for real estate and mortgage, a lot of big stages, and just been very happy to do that and proud to share and help just, give my perspective and my opinion on stuff to help originators, the true professionals out there, succeed and win. And I also have a couple podcasts. I have the Mortgage X podcast that I co-host with Christine Beckwith, who's an awesome mortgage professional. And then also I have the Mortgage Interrupt podcast and then produce the Next Level Loan Officers podcast as well. So I'm all about this industry. I'm all about helping originators win. That's me in a nutshell.
Well, there's three things that I love about you, dude. First of all, you're super smart. I've always, from the first time that I met you, and I think at the time you were a head of marketing for a company that we were selling to, and I just got off the call and go, man, this guy is smart. He's just super tuned in, sharp, visionary. And then I love that you've always seen that the modern way of doing things. And guys, people always think modern just means using tech, which it does, but it's also purpose-driven. Let's be purpose-driven professionals, not transaction-oriented professionals that use tech to win. And so I always love that about you. And then I think I told you the other day, the Mortgage X, it's just a cool logo. I love that Mortgage X piece of you. So, and I did have the honor of having dinner with you one time, one-on-one, and man, guys, this guy is just a great human being. He's just a good person. Really enjoyed our time together. Looking forward to one day again, being able to meet in the real world together. Todd, anything you want to frame around Jason before we just start asking questions and get into the topics at hand?
Well, I think you said it. I mean, he's someone who's so involved in the industry, and I just personally was fortunate enough to spend time over the last couple of years to be at a lot of the events where Jason was speaking and get to spend time with them. And I think you're just a contributor. And I think what other people need to take away from it is A, is to consume your content, but B, also to take action. Because I think that's one of the things that you're really good at encouraging other people to do.
Well, thanks, man. I appreciate it.
So before we go to the legacy piece, I want to speak to the fact, because I follow you on social media and I noticed that you just finished 75 Hard, which is like when I saw that you took on that challenge, I'm like, dude, that was like a big thing to do. So why don't you tell us about why you did that? And then maybe just give us your story around that. And then I think that will follow right into the big topic at hand, just how to go from today to, legacy and building wealth as a mortgage professional.
Yeah. So, I think, the way it started is just, I needed the change. Right. And then with just in general, even before COVID hit, and then even after that hit, I needed something, cause I was under a cloud. I think the last couple years, I haven't really been doing what I need to be doing. And I think I fed myself a lot of BS on why and what I should be doing. And I really just wasn't the person that I need to be. And then this was actually confirmed by other people from when I got myself out of certain situations where they said, hey man, you just weren't the guy that I've known since, forever. And so it validated the way that I felt internally, but I just didn't know. And so, when COVID hit and, a lot of people could probably identify this, staying home, a lot of people ballooned up a little bit, by eating more than what they should and snacking. Cause like me, like I'm a stress eater and guess what? This industry is not for the weak. It's a very stressful industry to be in. And especially if you're a loan originator, right? You're right on the front lines and you're dealing with a lot of that. So I was pushing, and I've always had issues with my weight since I got out of college, just because I wasn't playing sports every single day and stuff. And so, so I was about 300 pounds and, I'd been there before. I'd worked my way down, but, I needed something that I was going to stick with, something that was going to be hard to do, that was more of a mental toughness challenge. And that's what 75 Hard is. It's really about mental toughness. But the physical part of it, the working out is a huge part of the program. And just to give you guys just a quick look on what that is, 75 Hard is a no compromise, no substitutions, no rest program. You do everything that I'm about to tell you 75 days straight. There's no rest days. There's no, maybe I'll just double up on one day. You do every single task. If you miss one of them, even if it's day 69, you're starting over at day one. And as I went into it, I was like, as I got into like day 15, I'm like, I'm not messing up because I do not want to start this over again. And I've talked with a lot of people that are like Marines, people that have that do like CrossFit, some like real tough stuff. And they said 75 Hard is the hardest thing they've ever done. And the reason why, and it isn't the workouts, it's the consistency of doing the same thing every single day, 75 days straight. So the first is you do 2 45-minute workouts a day. One of them has to be outside. There's no substitutions, no compromises. Again, be safe. If you got a hurricane going on, you got a tornado, you got a lightning storm, you're just going to have to, have the garage door open and be like right in your driveway so you don't get hit by lightning or something like that, right? But one workout has to be outside and it's 45 minutes. And then you could do both of them outside if you want, but just one of them has to be outside. And then, so you do 2 45-minute workouts during the day. You drink a gallon of water each day. You read 10 pages of a nonfiction, like a personal, professional development, entrepreneurial, something like that. You do 10 pages of that a day, no alcohol. You pick a diet, any diet. You don't have to do, you don't have to choose one specific diet. I'm personally doing Weight Watchers. But you can pick whatever diet and you stick to it for 75 days. You don't do one for 10 and then switch it up. No, you do that same thing for 75 days, no alcohol for 75 days. And you take a progress picture. So it essentially, what you have to do each day isn't that complicated, but doing it every single day for 75 days straight, it changes you. And I've always been one of those guys that have heard like, I did this, it changed my life. And I'm always that cynical guy going like, whatever, it did, okay. But I'm telling you guys, like, this has totally changed my life for the better. It was hard to do. I had a great ton of support. I know, Dave, you sent me messages throughout the process, cheering me on and stuff. And it was hard. It was tough. And the beauty of it is that I started at 300 and then I weighed myself, a couple of days ago. I think I posted it online, which I'll tell you has got more. It's like almost at like 700 likes, 300 and some comments. It's easily my best performing post ever. So that's all you have to do is just lose 50 pounds in 78 days. And you'll get all the the reactions, engagement you want. But that's what I've done. So I'm down to 250 now from 300. I'm going to go. I'm doing it. You know, I'm now that I finished 75 hard. I'm going on and living in a 75 hard inspired life, not doing the same stuff each day, but something that will fit more. And on my road to getting down to 200 pounds. And so I'm going to continue to do that. We talked before we went online. This jersey I bought brand new years ago, and I'm now able to fit in, in fact, not only fit in it, but like it's loose on me. And so is a lot of my clothes that I had. And so it's changed my life. It's definitely given me that mental toughness. We all tell ourselves a lot of crap. We all have the angels and demons, the good angels and the bad angels on your shoulder that says, oh, put it off till tomorrow, or you could do that later. Don't worry about it. It's not a big deal. This basically just destroys that bad angel. You still have that voice, but there's things that I know that I would have told myself and not done prior to this, that I have that voice inside my head, and it always steers me in the right way now, because this really is just a game changer, and it's transformative. And I'm so happy I did it. And for health wise too, one thing is being a coach for Next Level Loan Officers. Those guys are all about fitness, all about mental health and physical health. And so they're the ones that really, and KT, one of the coaches there, he's done 75 hard, and he's a former Marine, and he's told me like he'll never do it again. but it was one of the hardest things he's ever done. And it's true. And being here for my family, being around, being here long enough on this world to create a legacy, it is important to me. And so this is definitely one of those channels that have helped me to do that.
Well, bro, you inspire me. Big applaud, guys. It took
Thanks,
a lot
man.
of
I appreciate it.
transparency and guts to do that, and then to come on a show and talk about this. A lot of vulnerability to do that. So super grateful for you, brother. And
Thanks, man.
I'm glad that we got to bring that story into the mortgage coach community on our 200th episode. I was not it wasn't a plan. We knew we had this 200th episode coming. We actually didn't have a guest, and Todd and I were just going to kind of celebrate the community and do Q&A. And then you and I were talking, and it just came together. So this is just a great way to honor that, dude. So thank you.
Thanks, man.
Todd, anything you want to say or ask after hearing that?
I think what you said, and I love the transparency, is what most people have experienced during COVID, right? I mean, there's not one person that I've talked to that has not had some change in their lifestyle, in their health, and made the excuse. And I've seen, definitely other friends do something similar to you, get themselves back on track, but not with that same commitment. So I would just encourage all of you who are thinking, you know what, I can totally resonate with that, but I couldn't do the 75 hard. We joked beforehand. I've looked at it, I've had other people do it, and I'm all about joining groups and having that accountability, because the accountability to me is the key. So hard to be accountable to yourself, but once you post it out there to your Facebook community and your friends, and I'm doing it, they're cheering you on.
You got to do it. Yeah.
That's part of what keeps people from getting let down, is that accountability piece. But really think about it from your perspective is, should you be considering some changes? Because, maybe your place where you live is opening it up. But in the end, I'm still talking to people who are at home and are not making the choice to do that. And it's just, even little things, like my wife and I got out this morning. We had an early morning commitment, but did a mile walk with the dogs. I mean, just do something to get your body outside and crush it, and, follow Jason's inspiration.
Cool. So guys, appreciate all the comments coming in. First of all, John, congrats, man. We've got a gentleman, a mortgage coach member who just started. He's 7 days in. So John, keep it rocking. That is awesome to see. On Facebook, we've got John Hill. So John Hill, you are the one who gave me a nudge to get Frazier in the mortgage coach community. So John Hill, you did play a part in what's happening right here. Thank you, brother. I love Julie Brown's comment, Julie Swanson, who's just a badass in the mortgage coach community. She's like, that's so awesome. You had me at no alcohol. Does wine count? No,
Yes.
It doesn't. By the way, that's grape juice. So you're good to go with that, Julie. At least in my book.
Yeah.
Anyways, that's cool. And then we've got Dave Gallegos, man. We've got a lot of rock stars in the mortgage coach community tuning into today's call.
Awesome.
So guys, keep the questions coming, keep the feedback coming. It does fuel us. So we appreciate that. So there are some questions that we're going to answer, but I'm going to save those for the back end of the call. So a couple of you that posted some things in our Facebook group that I promised we would talk about, I will make sure we save 5-10 minutes at the end. So if you're watching to get answers to your questions that are on Facebook, you'll get them. And hopefully if you ask us some questions during the call, we'll get to them. So when I asked Jason, what do you want to talk about, dude? Like, what do you think would be a good topic for you being a guest? And he was really passionate on the fact that a lot of loan officers are killing it. Some people are just making millions. Some people are making hundreds of thousands, but everybody's making more money as a mortgage professional. And he made the point, which Todd and I agreed, guys, this is a time to start thinking about how can we, one, diversify our income, and two, how can we, whether it's buy another business, whether that's invest in real estate, no matter what it is, how can we conduct ourselves in a way that we're building legacy? And I added the word generational wealth, so that you're not just making a good living and building a great lifestyle and buying new cars and bigger houses and putting in the pool and the deck and buying a better barbecue, but you're building generational wealth and you're building sustainable, wealth. So Jason, why don't you tell your version of that? And then let's get into strategies and ideas that loan officers are doing, because I know a lot of loan officers that own a lot of real estate. I know loan officers that own a second business. I know a lot of loan officers that, do investing in local businesses. So Jason, why don't you start it? And then we'll all go back and forth on this.
Yeah, no, absolutely. And this, I know it's not the normal topic that I talk about, because I'm always talking about marketing or technology or some other stuff. But this thing is, and again, just a shout out to the guys at Next Level, because I learned a lot from them and what they're doing and what they talk about. And honestly, we got two great examples right here. We got Todd and Dave, right? Like, they could just continue to originate and that was it, and not build an awesome technology platform or not build an awesome coaching, program and accountability with Win by Noon, but they did, right? Because they saw something and they saw a need and they knew they could do it. And then now it's beyond just mortgage. And so there's a lot of other great examples in our industry for that. And because right now everyone is doing an insane amount of business and a lot of people are making money, you'll hear people say, hey, hire, reinvest back in your business. Absolutely. But if we're talking legacy, and I mean legacy, like Win by Noon is a legacy, right? Mortgage Coach is a legacy. That's something that can live on past, when Todd decides not to do it or Dave decides not to do it. That's something that can be passed on to kids or someone else in your family, or even someone else like a business partner. Because what are you leaving behind? Well, if you're a mortgage professional, you can't just give your book of business to someone. You can't sell it especially if your family isn't in it, right? If your family aren't originating, then you can't leave it to your kids or anything. There's no real legacy there. But with the money that you're making now, could you invest in some technology or an app, or build a coaching program, or can you invest, like Dave said, back in your community and start owning some local businesses, or being an investor and being really part of that community? That's what creates legacy in your life. And that's what you could pass on to your kids. And that's with all the money that everyone's making. That's what I would like people to think about is really how long, what are you going to do in this business? What are you going to leave behind? Just making a lot of money. That's great. But that has to have some earning power long-term. And that's if you talk to anyone that's really built generational wealth, it isn't just making a lot of money. It's about investing that so that money continues to earn for you and earn for your children, your grandchildren, your great grandchildren. That's what makes this country great. And so owning a real estate business or title or insurance, again, obviously staying within regulations and what you can do. But this is how you do that, is use you're talking with a lot of self-employed people. You're talking with a lot of business owners. You're talking with a lot of professionals, just as a customer and, mortgage professional relationship, but you're also networking with a lot of people that maybe you guys could build something together. this is a great industry. It's a close-knit industry. You're going to make a lot of relationships. And through these, you can do some great things, especially now that you're making the money to invest. And look, not everything's going to be perfect. It's not, it all sounds like sunshine and rainbows, but I'm sure Dave and Todd could attest that it's building a business and doing this stuff is not, right? I know I can. And so that's the thing, is that there are a lot of opportunities to use what you do as an originator to build legacy for yourself and for your family, and leave something behind to your kids that they could pick up with or run one day. That's one thing that I've seen in this business is, whether it's a spouse, whether it's like me, I'm a second generation mortgage professional, right? Who knows, my son or my sons or my daughter, they may end up getting to it. My cousin's in this business. My wife worked in this business for a while. That's what this industry is. And it's not a lot of industries that are like that, but that's what we have. And also, look, I feel that this is one of the greatest industries because you could start from nothing. You could start as a receptionist and end up running a mortgage company. You could, or being at the very top. And I'm saying that from my mom. My mom started, Mason McDuffie Mortgage goes back to 1887. It's one of the oldest mortgage companies in the country. She started as a receptionist, obviously not back in 1887, but she started as a receptionist, and now she's the president and CEO of the company. And that's not the only story. I know there's plenty of other, people that were an originator or a closer or an underwriter and ended up going all the way to the top. And that's what's great about this industry. But if we want to create legacy, let's reinforce that and reinvest into the community that we create by being an originator.
So here's how I'd like to transition it, guys. I'm going to share a story and a strategy of someone who I've interviewed that to me epitomizes a modern originator in everything that he does. And he's also someone who has a strategy and a legacy. And what I'd love to do is I'm going to throw it to Todd after that. And then we're just going to go around, ideas, stories and strategies that we've heard. Also, it's a mastermind. So if you have a story and a strategy, like, hey, I'm investing in this, I'm diversifying this way, share it. And just because we've heard the same story, you can still share it. I'm looking for what is the mortgage coach community doing to build that legacy. So I'm going to start the going around and sharing stories with number week 49. So we're celebrating our 200th mastermind. I'm going to share a story from week 49. And this was an interview. Todd and I were both on this. So if you watch this, you saw Todd and I 150 episodes ago. Hopefully we've gotten better and better looking. But we interviewed Josh Meadow. And this is possibly one of my all-time favorite interviews. He shared 5 traits of a millionaire mortgage professional. And I swear, when I heard this thing, I was like, God, I wish I would have heard this when I started in the mortgage business. It was amazing. One of the things Josh does is he is invested in real estate. I don't know how many doors he owns, but he's a significant investor in real estate. And so listen to this interview. That's his strategy. He's a super successful mortgage professional. He's a branch manager, and he invests in real estate, and he is killing it. But I love this interview to such a degree that we have a playlist in the mortgage coach community, because I get asked all the time, hey, we hired someone new to the business. We've got this new loan officer playlist. It starts with Simon Sinek, get your why, because you need to know how to answer what's your rate. Number 2 is what's your rate. I put number 3, the 5 traits of a millionaire loan officer. So, and there's a lot of interviews in this playlist. So I think it's one of the most important interviews I've ever done. It's just a great story, a great strategy that epitomizes what you just brought up. So Todd, hot potato to you, and then we'll come back to Jason. Mortgage coach community, whether you're in Zoom or whether you're in Facebook, you got a story and a strategy, let us know.
So I'll tie my story into your story, and I'll try to make it brief. A lot of people don't know, but people who know me, I talk transparently about it. I felt like when I made a lot of money in the run up to 08, and I spent a lot of money as an originator, and you heard Jason say, you guys are making more money now than you've ever made. And I didn't have anyone at that time slap me upside the head and say, hey, Todd, are you saving money? Are you investing? The things that we're talking about today. And so I just pulled up my spreadsheet to look at it because I kept the spreadsheet back then. My net worth was negative $750,000. I was underwater $500,000 in my properties, and then I had a loan out to family that was over $250,000. And I had to slowly, get my way out of it. And so it was that wake up call for me of, hey, I got to be better about this going forward. And how am I going to strategize and build my team and look at that? So I bring that up because I've talked to a lot of coaching clients lately who say, gosh, I want to retire at X day. And so I'm bringing them back to what do you need to do now? And so at that time I was part of Master's Coach. And ironically, Josh is a big part of that story. You have to find an accountability partner. Josh and I had a time where we used to actually talk every Saturday about finances and where we were investing. And we still actually have those conversations, just not as frequently. And so think, what is it you need to look at today? Like, look at yourself. The good news about COVID is most people aren't spending as much money and you've been saving it. But really think about what Jason's saying. Think about what Dave's saying is, what do you need to do differently today in order to build your legacy? And for me, just like Josh, it's been in real estate. Back then, I had 5 properties. Now I've got over a dozen plus a commercial building, and it's made a huge difference, right? I've got Win by Noon as a business, and then my wife still runs our mortgage team. So I was able to keep that legacy going. And so think about it in your world. Number one is, well, when do you really want to work towards, right? That's one of those things, because you're going to have to build that roadmap. And then more importantly though, what do I need to do today? Like what should I be doing? Where can I be investing that's different? I'm not talking about, day trade and Tesla stock, right? I mean, if you want to learn about that, Dan Rowich's course is awesome. I'm in that. And so that's actually a little bit of my financial pillar as well. But ultimately look at yourself, look at what are you doing now with this money? And especially those of you who this is the first time you've made this much money, and start stacking it away, right? I mean, it would be so much easier if I would have stashed it away pre-crash and been smarter about it. And then, but now, you know what? I'm really fortunate to be in the position where, I've been able to follow my passion of helping others. And that's my story.
So I want to make sure make sure they took that away. So pre the last meltdown, Todd was negative net worth. Today he owns 10-ish properties. He owns commercial building where his branch is located. I hear that a lot, where mortgage coach leaders are buying the commercial building, although I don't know what that looks like in the future. I think, one, there's going to be a lot of good deals on commercial buildings, but there's also a lot less need for commercial buildings. So I'm not really sure how to, what to recommend. If anybody is on this call and you either own your building, I'd love to know about it. And if you're going to buy commercial real estate and that's part of your diversification strategy, I'd love to know that too. I think that would be a good dialogue to have. So anyways, Todd, you're just a great example. And then he's got a business interest. So he's got a mortgage side. He's got Win by Noon. He's got commercial. Love that. Jason, what are some of the strategies and ideas that you're hearing a lot of?
Yeah, the commercial one is a big one, right? I heard that at the last event I was. A lot of people buying the building or looking for a building to buy instead of, leasing where their office is going to be. Here in Utah, one thing that's been popping up, and because I just got an office in a building that was converted from actual offices to doing like co-working, virtual office space, flop offices that people could use. Because I think that, with remote working and everything that's continuing to happen, I think I think you're right, Dave. I think commercial real estate is going to take a huge hit, and there will be some deals out there. And then, if you're going to flip those, don't flip them into traditional office spaces. Do kind of the, not the WeWork route, because they made a lot of mistakes with that. But I think there's going to be a lot of companies that don't want to have that expense, but want, for those that, not everyone has an office at home, there's going to be kids at home now with, who knows how long all of this is going to go on. And again, and let's just be honest, this is going to happen again at some point. So you want to be prepared for the future. And so converting that commercial office space into that, for me personally, I've been, investing in some tech and some companies that have, that are serving the industry. I've been brought on, as an equity partner in some, and then, brought on as an advisor, some of it public, some of it private. Because that's where I want to diversify, because I think, and that's why I brought this up is, especially with looking at the perfect example of Todd and Dave, is there is a lot of need for change in our industry. And for those of you that have followed my content and listened to me speak, one of the things that I'm very, very big on is that we need to disrupt from within. It can't be outside. If it's from outside, then we're just dealing with what's left over. You guys are the true experts and the true professionals. You know what needs to be fixed. You know what can help a loan officer be better. You know where operations might be able to find some efficiencies, and invest in that technology or develop it yourself. Right. So that is where I see the benefit, and using your knowledge in this industry to create some stuff that just isn't there yet. Our industry is behind in a lot of areas. And I think if you start reinvesting back into the industry itself with some, some technology, some apps, some customer journeys and experience, that you can really create some stuff. And I'll say this whole, the whole pandemic with what's happened to the economy and everything else. If you look back throughout history, whenever there was a major disruption, right? Go back to the financial crisis, or even in the 20th century, is understand that whenever something like this happens, a major shift and change in behavior and want and need from a consumerism standpoint, this is when empires are built, right? This is when legacy businesses are built, is during these disruptive times. And we're living in one right now. We were living one in the last decade. We just didn't really lean into it like we should have. And so that is your advantage here, is because there is going to be opportunities to invest, opportunities to buy. Real estate is always that generational wealth builder, like Dave mentioned earlier. And so these are your times now. These are your times to really invest in the community and be a part of that, and create your name as a legacy around you.
Love that. So I want to unpack the idea that you shared of the WeWork inspired mortgage professional investor. And I just want to vision cast an idea that I think it would be a cool idea. And if I was a top producing team leader, whether I ran a branch, region, was a broker or whatever, but I was in a local market and I had made the decision, you know what, I want to be like Dan Keller. I want to be the most well-known mortgage professional in Seattle. What about the idea of buying a commercial piece of real estate where you could do a little mini WeWork inspired space, but it was all built around, I'm the captain of the wealth team. So I'm a mortgage professional, captain of the wealth team. I get to pick who's in it. I design it so that it's got financial planners, CPAs, real estate agents, the types of service providers that help a family build wealth with real estate. Maybe a property manager, some type of insurance professional, and you just build, and again, it's a slick, hip, cool space. It also acknowledges the fact that a lot of people don't want to come into the office, and they're going to be balancing virtual experiences, and you create space. So there's a video room, and there's, like, you're super intentional that because this is one gripe I had with WeWork, which I was a member of, is they weren't really thoughtful about how to create great content. Like, I could figure out some spaces where I can go and put the camera up and have great content, but it wasn't like they were strategic about it. Like, they built a super badass, beautiful, modern space, but then you had to be smart. Like, if I wanted to set my camera on a shelf, they didn't make that easy for me.
Yeah.
So what if you created a space that said, this is for modern professionals that help families build wealth with real estate, and you built that? Like, it's one of those things where it's almost like, what's that movie with Kevin Costner? You build it and they will come.
Field of Dreams.
Field of Dreams. Like I'm just throwing that out there for the mortgage coach community, to build your field of dreams built around the concept of being captain of the wealth team.
I think that's a huge idea, Dave. I'm trying to remember his name. I'll have to dig it up, but there's someone who did this back in 10 years ago, who built a building, not around this whole idea of the video and the space, but where he had all the different people of his wealth team in a building that he built. And so if anyone knows who that is, or if you're one of those people who's done it, let us know, because it'd be great to hear from you. But I think that's such a great idea. Plus, what a great way to be around other people who think like you, helping people like you want to help, and, building that synergy.
I don't even need to know if you like that idea, Jason, but what are your thoughts on that idea? I know you like it.
Yeah, no, I love it. In fact, I look at it two ways. One is kind of having that incubator cohort, except it's not about incubating like a product or anything. It's like this wealth, right? Like, how do I do it? And you have all, like Todd said, you have like-minded individuals that are all thinking about that and how you do it. And then you just have the perfect environment to breed that, right? And to look at things differently. And then the other side is almost like doing this in a mastermind perspective, is you have a lot of mortgage professionals that think the same and that want to do certain stuff, and they can come together and maybe develop something, that's more of in line of a cohort or an incubator that you would see on the technology and venture capital side of things. And that is powerful as well, because this is what I love, because you start thinking about these things and start visualizing these things and how that would work. And I think everyone right now, and this is has always been a problem in our industry, and I know, Dave, you've posted about this, I talk about this, is that the status quo mentality needs to die, and it needs to die a horrible, violent death. And I'm sorry, but it just does. And so what you just talked about, Dave, is just start thinking about things differently, and think about what's next that may not even exist, that may not even be an idea in anybody's head. But guess what? So is everything that we're doing now was an idea that somebody had. And of course, it was an idea that had 20 or 30 people telling you that it was an awful idea and it would never be done, because we only think about things in terms of experiences that we know. We don't ever really go outside and think of what can be done. And people were like thinking, oh, well, I don't know, Dave, because the first response you're going to get is people are like, well, they're going to find problems with trying to do something like that. Whereas that's the easiest, that's the cop out, is to find the reasons why something won't work. But what I would always stress to everybody now is instead of saying can and can't, ask what if. Do a huge whiteboard and write every idea that you have down, even if it's an awful idea, even if it's terrible, even if it's not scalable, write it down, right? And ask what if. And then start working back from what if and what would happen if that did come to fruition. And then work your way back. And then once you start thinking about in terms of what if, as opposed to can and can't, you'll start to really open up your thought process. And that's when you're going to create something different, right? Because if you stay in the world of can and can't, then you're only going to create the things that people know about. And guess what? That's the echo. That's not the voice. And nobody's going to follow that.
Love that advice, guys. Take his advice. I would love to know, if you are doing something, in a sentence, let us know what it is. I am investing in real estate. I am buying a small business. I talked to a mortgage executive just a couple of days ago that's an investor. It's like, I'm going to invest in it's a pretty big bar. It's not just like a neighborhood bar, but a really cool, iconic bar. And he's not going to run it. He's got a general manager. I know another mortgage professional that they bought a pizza place and the husband runs it. But what have you done and what are you going to do? Just share us in a sentence or less in comments. If you're watching this on YouTube, watch it. So Todd, I want to transition to the status quo needs to die. I'm not going to go with the violent death, but it needs to die. It needs to die. So I want to transition to that, because it will also nicely tee up a couple questions in the community. But anything else you want to share on this, creating generational wealth, creating sustainable wealth, and diversifying? Anything you want to share on that before we wrap up a bow around that topic?
I just think you need to make it a priority. Like I said, don't be like me and come out of this amazing time as an originator. At some point, it's going to slow down again. And at some point, you're going to look back and say, gosh, I wish I would have done blank back then, right? There's going to be opportunities coming out of this time where we're crushing it and other people aren't, to pick up the commercial space and do what Dave's talking about, to invest in other businesses, do what Jason's doing and help out people in startups. And I think if you're so busy being busy and you don't actually, come up, think about the submarine, putting that little telescoping thing up, and be looking around for opportunities, because that's what's going to happen. So I would just say, make sure that you schedule time now each week just to do a quick wealth review, schedule time to ask around others in the community, what are you going to do? Find someone like I found Josh that you can transparently talk about what you're doing and your money, because that's really what's going to help you get laser focused on it, and just don't be complacent. I think that's really it. I mean, I wrote down the status quo needs to die because Jason said it before. And I think that's key. And I think that's complacency. And I think that's what we fall into because we make excuses right now, right? We're not willing to commit to these things. I mean, think about Jason, not only is he doing all this, he did the 75 hard and everything else. And so I just got to encourage you guys, let this be the slap upside of your head so that you actually can think smarter and do better coming out of this.
I love it, guys. So I want to share a few slides, share a story, share my perspective, and then Jason, get your response to what I'm going to share. And shouldn't take more than 5 minutes, and then just round robin on this. So guys, when I hear status quo, I think of the fee worksheet, rate, payment, cash to close. That is not a valuable experience. That is a transaction. And so I've been an evangelist, an advocate, a change agent for why loan officers need to be mortgage advisors and how they can do it. So let me tell you a quick story. And Jason, I don't know if you saw this interview or you know this strategy, but I interviewed Amber Kovarik, who closed 45 loans last month, top producer in Chandler, Arizona. And all she's doing is she's asking one more question to her families right now. How is this house working for you? And then she's putting her personality, her market, little color around it. And she's finding about 25% of the families that she serves are like, I'd like another room. I'd like a kitchen. I'm going to be working out of my house. I need a home office. She's finding a lot of folks want something. So guys, this is what we're talking about. Status quo needs to die. This is not status quo. This is where she's saying, hey, you could refi and save $322 a month, or you qualify for 5% down and you could buy that home with the extra room in the school district that you want. You have enough equity to do that. Your payment would go up by $500, $507. Or you could buy the home, sell the home because you have equity. You could recast the mortgage and actually have a payment $164 less. Now, what this family decided to do was, you know what? It's COVID. We want more money in the bank. So let's buy the new home. Let's sell the old home. Let's put $125,000 in the bank at 6%. And boom, guys, this is a family that is taking historically low rates, the fact that values have done really well, and just by moving up, they're creating significantly more equity. Guys, check this out. $125,000 more in cash, 50% increase in cash, 60% increase in equity, and more lifestyle. So that's also not a bad strategy for some mortgage professionals out there. If you are going to move up strategically. And then guys, here's the other beauty. We can serve our realtors. Agent gets a listing. Agent gets a move up buyer. So just a great example of don't be a status quo, rate, payment, cash to close on a PDF. Be a mortgage advisor that's helping a family make a better decision. And here's the deal, guys. This is not comparable anymore. I mean, when you look at Mortgage Coach and how we're trending, last month we had even more TCAs created, but in July, there was 128,472 Mortgage Coach TCAs created. So we're killing it. And almost 300,000 families in the month of July viewed a Mortgage Coach report. So like here's the takeaway, because I'm with you, Jason. It's happening. Like this change is happening. This was a quote from when I attended Inman in 2017. And the founder of Zillow said, the agent of the future is a coach and advisor to home buyers and home sellers. Well, my last quote, and then I'm going to hand it off to you, Jason, is, guys, the future is here. It's one of the things we do here at Mortgage Coach is we help you go from loan officer, fee worksheet, I close loans, I have great rates, I can close your loan fast, to something more than that. So that's one story, that's one strategy of crushing status quo and really doing something more and being a modern professional. Jason, what are your thoughts on that? Anything to add?
Yeah. So, one thing that I would add first, just because you kind of ended on that slide with Barton of Zillow, is, look, as an originator, one thing you need to understand, and we were talking about killing the status quo, is the fact that Zillow's stated, and this is me talking to Rich at MN Connect because he spoke on stage right after I did, and we talked in the green room, and his stated purpose is that Zillow is the one-stop shop for the consumer, real estate, mortgage, everything. is Zillow. That's what they want to do. So that's what you're competing against. Not only that, as an originator, you're competing against every single major real estate brokerage has a mortgage arm or a mortgage channel now, right? So you have a lot of competition. So continuing to do what we've always done, we're going to get what we've always gotten, right? Which is the same thing over and over again. It's Groundhog's Day, right? That's what this industry is for the most part. Going to what Dave said, what stuck out to me, because look, everyone might say that if I just throw money or like the graphs and the costs, that's going to sell it. How many clients have you had that didn't want to do, 275 because they wanted 2.5, right? So they're willing to suffer, or pay more money until they, you know what I mean? Like, it's not always about the money, but what she did was, how is that house working for you? Right? How she's asking the goals. And look, I've been on, when we did lead generation, I would be listening to the phone calls between loan officers and consumers. And about 95% of the time, the loan officer would never ask what the stated goals of the reason why they're doing what they're doing. My friends, that is the most valuable data you're going to get from those calls, is understanding the reasons why. If you market to the reasons why, Russell Brunson talks about it, either you're going towards pleasure or you're going away from pain. It's the before state and the after state. If you nail that down, if you truly nail that down with the consumer, your messaging is going to resonate and reach more than any one of the other, your colleagues or your competition. It's just, that's just the fact, right? And so when you look at the stated goals, the reasons why, especially now with COVID, people want larger backyards because they may be home more. They're going to be working from home and not in an office, so they need that office space. When you have the reasons why, and then you add what Dave showed with the total cost analysis on that, and it makes it resonate, right? Because that almost becomes a side benefit. Their goal is to have an office. Their goal is to have a bigger backyard. And then when you're throwing on savings and how you could make that money work for them, as an advisor, that's just an added benefit. And so those conversations are easy. Those conversions, I guarantee you, if you start having that type of mentality when you're talking with consumers, your conversions will go up. I guarantee it, because I've seen it, and we put this into play. And I look, everything I talk about, guys, isn't as a hey, this is a theory and maybe this works, maybe it doesn't. This is all for me being a practitioner and seeing this put into play and see it work, right? There's a reason why you have a lot of top producers that use Mortgage Coach and use it, not just have it, but use it and put strategy behind it, right? There's a reason why, because it works, right? So just think about, but it's just a tool, right? You have to be the professional. You have to be advisor. You have to use some strategy in it. And I'm telling you, just like with what Dave showed, with how she was talking about how this house works for you, and then talking about home office, talking about a backyard, you start putting in the human element into these presentations. I'm telling you, the cost benefit just becomes the sweetener to close that deal.
Well, that's just caring about the person on the other end of the phone, right? Loan officers who don't ask those questions are typically in a hurry. They're not trying to build a relationship. But in Amber's case, what stands out to me about that is the fact that she's not after the money, right? If she's after the money, she would just sell them on the refi and saving it and getting it done now. And that, instead, she's actually looking after them. So it kind of goes back to the whole legacy thing, right? For a family, having a home for their family is a legacy. And she's willing to take it, delay her immediate satisfaction, her compensation, to help them get what they want and help her partners at the same time.
So guys, I'm going to close out with just some speedballs with Jason. Before I do that, there was a new loan officer that posted in our group. I want to make sure I answer your question. And I think I could do it pretty quick, but he's new to the business. So first of all, congratulations for joining the business. Congratulations for finding the Mortgage Coach community, and a great job for posting. You had a question and you posted it, and you did a really nice job articulating your question. So Josh, welcome to the space. Hope we see more leadership from you. Also hope we get more questions from you. I really like the way you did this. But he's basically saying, hey, when I'm doing refis, when do I give the total cost analysis? He's obviously a new member. And he's kind of like, do I get the statement and then give the TCA? Do I give the TCA before I get the statement? And here's the answer, bro. There's no right answer. if you listen to my interview with Jeremy Forcier, he says, hey, when I get the statement, this is what I do, and this is what the TCA looks like. And when I don't get the statement, this is what I do, and this is what the TCA looks like. So I would study. First of all, that interview was filled with about 33 takeaways. And I only know that because Jim McQuaig, who is a iconic leader in our community, he's used Mortgage Coach back in the day. He now manages a mega branch with 33 loan officers. He said he literally texted me afterwards going, that interview was amazing. I have 33 bullet points. He actually sent me a picture of it. And I just had a sales meeting on that interview, and it was the best sales meeting of the year. And this is the guy that puts on good sales meetings. So it's epic, but study that, Josh. And so there's no right answer. It's tailor, teach, control. So tailor, ask questions, get goals, then tailor the total cost analysis based off of the goals, based off of what information you have. Jeremy has 2 different TCAs, one with bank statements, one without. And then control, that means be a leader. Like, you don't know, you're new, but soon you will have a process and you'll lead a client. And that's my answer. Jason and Todd, either one of you guys want to take a crack at that before we move on and just close out with some speedballs?
I think the TCA goes out whenever you're at that point where you need that as the tool to explain to your client, especially when a client's got a significant other or a family member, or a friend who's going to be helping them make the decision. We just know when you throw numbers out over the phone, break even, you're going to save this much money. It's like the teacher in Charlie Brown, wah, wah, wah. They don't understand it. You're just going to roll over them, and that's what everyone else is doing. Yep. And so I just think it's a great way of saying it. For me, it would be get the statement in, create the TCA, send it out with the video with a call to action. Hey, either reply back with the scenario that you choose, or give me a call if you've got questions to discuss, and then make sure that you've got a quick follow-up within 24 hours to follow up if they're going to be out shopping. But ultimately, you're going to find that if you actually do it at that piece, you're going to shorten up your follow-up phone call with the client because you've already given them what they really need to know. And oftentimes they're just going to say, hey, go with this one. Still pick up the phone and call them and tell them what's next. But that'd be my process.
Love it. Jason, anything you want to add?
Yeah, no, I mean, I think what both you guys said is right on point. I mean, I would just go back to, when you're having that upfront conversation, really understand their reasons why, and then you fold the TCA into that, because one, it's going to get a higher open, like maybe with your subject line, this is how you get your backyard and more, right? Or this is how you get your home office and more, right? Personalize it, customize it, because again, chances are you're not going to be the only loan officer that, especially if it's coming from the internet and it's not a direct referral, you're not, and even then it's doubtful. You're not going to be the only loan officer that's talking to them. So like Todd said, don't just roll them over, right? Like, talk to them a little bit and then give them that, because if it's numbers up front, sometimes it's just not going to resonate.
So that just reminded me, I interviewed Josh Metal 2 days ago for what will be a panel at Sales Mastery. If you haven't signed up for Sales Mastery, not too late, get on it. But I did a great panel, and then I did a breakout with Josh. And the way he's getting his past clients to call back on refis is he's telling them about the savings over 5 years. So most loan officers will say your savings is, I can lower your rate by half, and that's a monthly payment of X. He is always starting with 5 years. So Jason, you just reminded me, start with the big value. Don't sell rates and monthly payment savings. Sell more bedrooms, wealth over time, savings over 5 years. Talk about bigger things. So great catch. So in the last 2 minutes, Jason, dude, you're also a social media badass. So any advice right now, just knowing the market we're in, the low rates we're in, are there any posts that you've seen that, like, guys, if I was a loan officer today, I would post this? Or is there just any leadership you have around social media? But just give us like an idea that we could close out the call with.
Yeah, so I have something that I'll share that I'm going to be trying. It's part of a bigger thing that I'm doing that I'm working with a couple of loan officers on. But in honor of the 200th episode, I'll give it to you guys as well, just to try it out and see how it works. But just real quick before we do that, look, guys, do not forget your referral partners and your purchase business. I'm seeing way too many of that. I know loan officers right now that are just cleaning up on relationships because nobody's calling agents anymore. Everyone's worried about the refi. don't let that go. I'm telling you, loan officers are still in your people right now, because they're creating those relationships because, you know, and I get it. Everyone's inundated. Everyone's busy right now, but don't forget your referral partners, your purchase business. This is not going to last forever. You're going to need that business. So just make sure you don't do that. Now, as far as social media, this is what I would love everybody to try, right? This is what you do. And think about your last, and this could be either, let's just focus on refi right now, because everyone's thinking about that. Think about the average savings and go with what Dave talked about, 5 years or whatever, or even a month, and just, and do this. Do a picture of you holding up a piece of paper, and maybe they can't see it. Maybe it's blurred out. Maybe it's, you know, whatever. And just say this, what, you know, would you want more information if I told you this piece of paper would net you 15, 2,000, or, you know, whatever it happens to be, your average savings that you're giving clients right now with their refi, say this piece of paper right now is worth to you at least $1,400. Would you pay me $1,400 for this piece of paper? Ask me why, right? In the comments. And I guarantee you, you'll get engagement from it. And what the point is saying, this paper is basically, and you can make it up. Just say, this is my custom loan approval to you. If I refied you right now, I'm saving people. And that's when you get into like, I'm saving people over 12 months, over 5 years, I'm saving them X amount of money. And so now this piece of paper, this loan approval, is worth $5,000, right? Would you pay me pay me money for this piece of paper that's worth $5,000? People are like, no, but then it gets you, what it does is just a sparks conversation. That's what you need to be doing on social media right now, is sparking conversation, engagement, get them to ask you questions. We're projecting at people. We're interrupting what they do, right? Can't do that because everyone's doing that. You need them to ask you the question and saying, hey, this piece of paper is worth $5,000 to you. Ask me why, or ask me how, and ask me how I could get this to you. And would you pay me for that? And this is a tactic that I learned from Russell Brunson, who's the founder and owner of ClickFunnels. And he did it in a different aspect, in a different way, but it's the same thing. And basically he started saying, who would pay me $100,000 for my iPhone? And nobody raised their hand. But at the end of the day, at the end of his 20-minute presentation, he had 3 people raise their hands willing to pay him $1 million for that iPhone. And it's all about the presentation, and it's all about adding value and giving people the perceived value of what you're offering them as a mortgage professional.
So guys, let's play that forward. If you do a badass post, it gets engagement, share it in the mortgage coach community. I've been seeing a lot of stories where, hey, I had a family, I saved them this, do you want it? I love that picture of a piece of paper. So if you share something, it works, play it forward in the mortgage coach community. Jason, dude, it was such a gift to have you on our 200th Friday Mastermind, bro. So we appreciate you.
Thank you. Thank you for having me, man. This has been awesome.
You give this a like, give it a love, share it with your team, and then Todd Bookspan, closing thoughts.
You know, closing thoughts are, it was an awesome 200th call. Jason, you always add so much value. And as always, what are you going to do with it, right? You sat here, you watched this video, or you watched it live, and now you've got some ideas of how to take action, whether it's to build legacy financially, whether it's different scripts with your clients, following up with your partners, like Jason said at the end, which was probably a huge nugget we all know and aren't necessarily doing. And go take action, right? Schedule some time now, make it happen. I know you're busy, but we're all busy. So stop being busy, and just get out there and crush it. We're grateful for you in this community, and we want to see you succeed even at a higher level than you're currently succeeding at. So thanks everyone for joining us. On behalf of Dave, Jason, Mortgage Coach Win by Noon, and everything that Jason does, we're so grateful that you were here today.
Awesome. Thank you.
This call is a wrap. Got a quick photo.
There you go. See you next week,
There you
guys.
go. That was the 200th. I had to just take a picture of it.
Awesome.
All right. Take care, everybody.